gentlemen, to Midas Resources, 800-686-2237. You heard Ted. He can't hold those deals very long. 800-686-2237. With us a little bit in the next hour is Porter Stansberry, the managing director, the head of Stansberry Research. These folks have more subscribers than the New York Times, and you've seen their ads on TV, you've heard the ads on the radio, you've heard my voice. They've been saying now for really a year that there was going to be a dollar default. About 4 months ago, they started saying that they believed it would happen by the end of this year or early next year, and a lot of people said, man, that's a bold prediction. Well, now all you hear about is default or technical default, with the Federal Reserve monetizing over 70% of the debt. You have the Federal Reserve announcements today that they will end QE2, but how are they going to do that if nobody else is going to buy it, if they're not raising interest rates? He really stuck his neck out there in the view of some. For me, it was common sense by coming out with the end of America information. But they're also moving in a direction of restoring the republic and also people protecting themselves. And Porter Stansberry joins us, endofamericavideo.com. Endofamericavideo.com is where you can go and watch the full hour presentation that's now been out, I don't know, 4 or 5 months or even longer, that is laying out everything that's now transpiring. So when Porter talks, we need to listen. Barron's called his work a dire prophecy, with his accuracy calling so many companies that went under long before anybody else was predicting it. And he's made the point here on this show previously, that was all child's play compared to the predictions that he's now making. And going back to the fall of last year, when he started really sounding the alarm and calling it, it's now happening. IMF bombshell, Age of America nears in, Market Watch, the new Federal Reserve press release out. We've got gold surging, silver surging. They're talking about $7 a gallon gas by next year. They're openly talking about defaults. Geithner's threatening people last week and this week, saying, give us more taxes, give us more money, or there'll be a default. But S&P said we have a bad outlook for the U.S. keeping AAA rating because of the spending. So it's just incredible. Porter Stansberry, endofamericavideo.com. Thank you for joining us. There's so much to talk about, but you have certainly been on target so far. Is there any way that your prediction can't come true? Because I want you to be wrong.
Yeah, Alex, thanks for having me back. You know, one of the first things I said to you when we met 4 months ago on the phone, when you first had me on the show, was the question in my mind isn't when this will happen. The question in my mind is, when will you realize it is happening? And I asked you, I went through the litany of things. You know, how high is gas going to have to go? How high will silver have to go? How many banks are going to have to fail? You know, how many Moody's downgrades are we going to have to see before it'll finally occur to you that, man, we can't repay these debts, and there are serious consequences to that fact. So, you know, I think that that was 4 or 5 months ago. That was before the riots in Wisconsin. That was before the drama in the Middle East that's been caused by the inflation that we're producing. So many of the things we have seen in just 4 months come straight out of my report, as you know, because you've seen it. But I think today, for the first time ever, when folks view my work, they're not saying, oh, this could never happen. Now they're saying, man, this is happening right now. What should I do? And the answers, of course, are, you know, in the research that we produce and sell to our subscribers. Starting with, you cannot believe anything the government tells you about the state of our financial affairs. They are in complete denial. Neither a Republican nor Democrat has put forth a balanced budget ever in the last 20 years.
Oh, yeah, Paul Ryan's program only rearranges deck chairs, more of them than Obama's program. $38 billion in cuts, what they've agreed to, $5 trillion over a decade. I mean, if you don't get rid of the fractional reserve banking system, if we don't write off the derivatives, everything else is window dressing, is it not?
It's all that's the point. That's the main point I'm making, and that sooner or later our creditors are going to get fed up with this. We don't know. The fact is, we don't know whether our creditors are fed up with it or not already. There are plenty of indications that they are. But as long as the Fed is printing all the money necessary to buy all the new bonds, we haven't seen the market impact of this. All that stops with the end of QE2, and that will be the gigantic litmus test. And I can tell you already exactly what will happen, okay? Interest rates are going to spike, the stock market is going to fall, unemployment is going to rise, silver and gold are going to continue to go up, and the Fed will have to announce QE3 because there is no other way to finance our debts. And believe me, if you think silver has gone up a lot, wait until QE3 is announced. Silver will absolutely soar. It will at least double from its current price today. And, you know, I told you 4 months ago, I said, hey, Alex, how much silver do you own? And you said, well, you know, blah, blah, blah. Who buys silver? Well, you know, it's gone up 50% since then. It's going to go higher because the fact is we can't repay our debts in anything but newly printed money.
No, you've been calling silver for years. And I had Dr. Paul Craig Roberts, former head of the Treasury, on a few days ago, and he said when they get rid of QE2, it may create such a depression in the economy that for a short term, it may make gold and silver go down, but then the inflation will only pick up again, and then it'll go back up. But many of the other economists I talked to are saying what you're saying, that basically it's going to be unabated. Do you disagree with what he was saying?
I will tell you this. If you look at what happened after the end of QE1, gold did not fall. All the other commodities did. And you're going to see exactly the same thing this time. Gold and silver's rise may slow, but it will not decline. And the reason why is because if you want to know the real credit rating of the United States, pay no attention to Moody's and S&P. They're liars, and everyone should know that by now. You want to know the real credit rating of the United States, pull up a chart of the bond market versus precious metals. And you'll see that gap between the value of our government's bonds and the value of precious metals continues to get wider every month in and month out since the bailouts of 2008. And why is that happening? Because the real credit rating of the United States is being expressed in the soaring price of gold and the falling price of our bonds. And they're propping up the bond market, but they cannot control the price of gold and silver.
Now, Porter, I want to continue breaking down what's currently happening, how you see this unfolding, how long after June and the QE2 ending. A lot of experts we talk to think they're going to quietly continue some QE2, just not at the same level, but that will still have the same inflationary effect. But every time I've had you on, you really don't even promote the newsletters. You have a wide body of specific analysis, general analysis, your overall newsletter. Tell the listeners, if they visit endofamericavideo.com, how they can go there and then check out the different subscriptions that are offered, because this is valuable information. I've researched your info, and I have found none better, and I found no one who's bold enough to have the courage that you've had.
Thank you very much, Alex. I definitely speak my mind, and you know, I'm bound to be wrong from time to time, but at least my subscribers can always count on me to tell them what I believe and why I believe it. And I tell you what, you know how rare that is in today's environment, where everybody has an agenda. You know, not me. I only get paid by my subscribers, and I offer a money-back guarantee on all my products. So if you're ever not happy, no problem. We'll just send you your money back. But the best thing to do is please go watch the video. Alex is giving you the website address. Check out my newsletter, which is called Stansberry's Investment Advisory. If I can make you some money, great. Renew your newsletter. If not, I'll send you your money back. No questions asked. That's how I do business.
And it's important to know and to be able to understand what's happening. Now, discuss this announcement by Bernanke today in their press release. It's up on Infowars.com, but what does that really signify? What will that monetarily mean? And then we see the Financial Times of London headline 2 days ago, Chinese signal they may cut their purchases that they've already cut the last 2 years. They've already trimmed. They may butcher it by 2/3. That right there, technically, in my research, would signal the point of no return for the greenback. Well,
you know, the key thing, as I have explained to you many times, and is in my online production that I want people to go look at, the key for Americans is whether or not the U.S. dollar can remain what's called the world's reserve currency. And that's a fancy word, but all it means is, will banks around the world continue to stockpile dollars so that trade between countries can be netted out? So if you're Brazil and you want to buy some German cars, are you going to pay in euros or are you going to pay in dollars? And today, people pay in dollars, and that creates a huge need for dollars around the world. And that's why China ends up with dollars, because China has trade surpluses. So now, for the first time ever, many countries, led by China, are negotiating bilateral trade agreements where they are agreeing to accept other foreign currencies, like Russia and China. Now, when they trade, they do not use dollars. And those kinds of agreements are going to grow in scope. I also believe, and this is speculation, but it's what I believe, Alex, I believe very shortly you will see the Chinese announce that they're going to begin backing their currency, the yuan, in some combination of gold and silver. And overnight, that will make it the most attractive currency in the world to do business with.
Well, that's what the news is saying.
Profound implications for Americans.
Well, the news is now, again, just a month ago, none of this was in the news. Now, suddenly I listen to Bloomberg, it sounds like Porter Stansberry. Now I listen to CNN, it sounds like Porter Stansberry. So when you say don't believe the government's numbers, we know those are cooked, but the mainline media has lost so much credibility that I surfed through the channels on XM today of TV stations, and every show was talking, every financial show saying, well, you think $4 a gallon's a lot, try $7 by the end of next year. And they were admitting, not because of OPEC, not because of speculators, but because of dollar devaluation, what's going to happen to a faltering economy that can't handle $4 a gallon when the dollar gets devalued more and more, and as it gets unpegged from oil, how high do you think it will go, and how devastating will this be?
You know, there's no telling how high it could go. There really is no telling what we might lose if suddenly there is a dollar crash. And let me tell you why this is so scary, Alex. And I've been saying this for months and months and months, and I'm not trying to scare people. I just want you to know what the reality is, what the risks are. By printing money to repay our debts, we are kicking our creditors in the shins, and they are tired of it. So they are looking for an alternative, and that's why central banks are buying gold again from around the world. But the big risk is there are so many dollars that have been stockpiled overseas that if the world moves away from trading in dollars, all those dollars they're going to be cashed in, and they're going to be cashed in the form of a collapse in our bond market and a collapse in the purchasing power of our dollar. Because if everybody moves to sell the dollar, the value of the dollar is going to collapse. And we are very, very close to that point.
Porter, I heard Mike Huckabee today on his little Paul Harvey-type blurblet he does, and I normally don't agree with some of what he has to say, but he came out and said, why is Geithner telling us that we have a strong dollar and a strong dollar policy when the dollar is weakening to all-time historic lows in modern history, and when the policies are what are weakening the dollar, a monetization of debt, that he went on to explain it in kind of Little League fashion for his listeners. But he was actually telling the truth. I guess a lot of the middle class elite are figuring out, and upper middle class, that this is going to hurt everybody. You know, so many people went along with globalism and the central bank. Now they're figuring out just how devastating these policies are going to be. And then he went on and said the evidence shows they want to wreck the dollar. They want to damage it. They want to get rid of it. And I know you focus on what's going to happen. How do you protect yourself? Because you don't, believe overall in the wisdom of the general public from what you've seen. And so you're just saying, folks, protect yourselves individually. And I think on one front we should do that, but also continue to try to fight these people on the other. And I know that's your view as well. I don't want to put words in your mouth, but you can correct me. But clearly they know what they're doing. Clearly this is the policy. And Soros and others are saying they want to force us onto this new global basket that's partially gold and silver backed, which they are flush in to basically use the crisis they've created to consolidate wealth and control. What's your view on that overall statement?
Well, I certainly wouldn't disagree with you that it is in the best interest of some people for the dollar to lose value. And I think that to the extent that they encourage these policies, that's absolutely the truth. But I see it more as simply natural political power. Having a paper dollar allows politicians to promise benefits without having to deliver the taxes to finance them. So I see this as more of a natural evolution. It happens in every democracy. It's happened for as long as we have recorded history. There has never been a paper currency standard that survived for very long. And never in history before has there been a global paper standard, which is what we have now. It's lasted 40 40 years since 1971. In my opinion, the collapse of the paper dollar is absolutely inevitable, regardless of who it benefits. And I think that if it does collapse and we go to a precious metals backed standard, which is, by the way, what we had constitutionally in this country originally, and what we had for 200 years, it would benefit the common man the most, because it would make it impossible for the politicians to have the power of an unlimited checkbook, and that is the greatest risk to real liberty in our country.
Well, I couldn't say it any better. In fact, I can't break it down as succinctly as you do. Bottom line, Porter Stansberry, you are the only major analyst out there who called Bear Stearns, who called GM, who called Fannie Mae, Freddie Mac. You were the first, and that was what was so frightening whenever I saw your analysis 5 months ago when your video first came out and we contacted you about coming on.